What's up guys, and welcome to Wall Street Millennial. On this channel, we cover all things stocks and investing. In this video, we're going to go over the greatest gains and losses on the Wallstreetbets forum from the past week, so we can learn from other people's experiences. Before we get into the video, we'd like to thank our channel members who get access to these non-time sensitive videos one day in advance. They also get to vote on some of our video topics. First off, we have user Hal Tran, who is down 6 figures on a $630,000 rocket company's YOLO. He owns a huge number of rocket companies' call positions. In fact, he had so many positions that he had to upload 2 screenshots just to show all of them. They had a wide range of expiries from May 14th at the earliest to January 2023 at the latest. The strike prices also range from $23 all the way up to $59. He put $630,000 into these positions and currently is down $262,000. Rocket experienced a short squeeze in early March, but has since lost more than half of its value. Recently, they announced their earnings results, which missed expectations, causing the stock to decline by more than 20%. This puts even his lowest strike call of $23 well out of the money. The OP is a long-term believer in rocket companies. He believes the online mortgage lender has a good strategy. However, it may take years before this plays out in the stock price. Fortunately, some of his calls are leaps, including a January 2023 34 strike call. While the mark-to-market losses of $262,000 are large, his position still has a positive probability of ending up in the green. The OP looks at the bright side of the situation. His loss allowed him to put some high-quality loss porn on Wallstreetbets, which increases his Reddit karma. Hopefully, the 16,982 Reddit karma was worth the 6-figure loss.
Stop it. Get some help.
Next off, we have user Siphonismus, who is bag holding $70,000 in unrealized losses. He owns shares in Palantir, African e-commerce company Jumia, cloud services company Fastly, among others. He is down double digits on every single one of these investments, with his biggest losses being on Palantir and Fastly. Palantir is down more than 20% over the past month, as it has been victim to a broad sell-off in high-flying tech stocks. Fastly is doing even worse, suffering a 37% decline in the past month. Most of these losses came within the past couple weeks. Fastly provides cloud computing services to internet companies. Historically, they had TikTok as a client, and the growth of TikTok in 2020 fueled Fastly's revenue growth and share price. However, in October of 2020, TikTok's parent company ByteDance made a decision to pull most of its data traffic from the Fastly network. This was a major blow to Fastly and caused the stock price to be cut in half. Subsequently, the company said that they could make up the lost revenue with new customers. However, this is yet to happen, and Fastly stock has continued to bleed out. The OP's heavy tech exposure did not do well over the past couple months, and this cost him a $70,000 loss. Next up, we have user Diamond Hands, who has lost $387,000 since his peak on March 15th. He made massive gains in early 2021 with options plays on high-flying stocks including Palantir, DraftKings, and GameStop. This took his account to a peak value of $580,000. This was a truly life-changing amount of money for the OP, as he had been poor for a long time before this. However, he failed to take profits and is now down almost $400,000. On the bright side, all he lost were unrealized gains. His account currently sits at $192,000, which is far higher than he had originally. Most commenters are supportive of his positions and advise him to use the current dip in Palantir stock as a buying opportunity. However, the OP has bought the previous 17 dips, but the stock seems to not stop dipping. We wish you luck on your future trades. Next we have user Rock with the Roll, who has generated some serious loss porn over the past week. He is down 37,000 Canadian dollars on Paysafe calls. Paysafe is a British payments company whose stock has traded sideways over the past week. He is down 32,000 Canadian dollars on Skills calls. Skills has not had a very good past week, with the stock price declining 12%. His biggest loss is Up Fintech Holdings, a Chinese stock brokerage app. His calls are down 113,000 Canadian dollars as the stock has declined more than 18%. He is also down $44,000 on Palantir calls. Palantir is also down more than 15%. And finally, he is down $32,000 on Virgin Galactic calls as the stock has fallen roughly 10%. In total, he is down almost 261,000 Canadian dollars in the past week alone. Next we have user Who Needs Cash, who is down $52,000 on Alibaba. He owns 70 contracts of June 18th 290 strike calls that he purchased at a cost basis of $8.02. They have since decreased 94% to 42 cents each, costing him a $52,000 loss. Alibaba stock has actually surpassed $300 a share in the past at its peak in October of 2020. However, fears of antitrust scrutiny have pushed the stock down 20% to $220. At this level, the OP's calls are 30% out of the money and have declined in value accordingly. He bought the calls in February hoping for a reversal. The company has an impeccable balance sheet, so it's ridiculous for the stock to be below $300 in his opinion. His conviction is so strong that he bought even more calls on the same day he made this post. We wish you luck. Next we have Roger Brutus with a 4-figure gain on FDs made in only 3 days till expiry. Starting out with $855, he invested in calls on the steelmaker Nucor, with calls that expired on May 7th. He bought them starting on May 4th and sold his last ones on May 6th, 1 day before expiry. He mainly dealt in 87 strike calls. Nucor is one of the most talked about reopening plays, as a heavy industry player that stands to benefit from all parts of the economy going back to normal. In the past 5 days in particular, the stock has gained more than 20%. Part of this bullish sentiment might be the result of market commentators like Jim Cramer touting Nucor and other similar stocks as cyclicals that will do well in a reopening. Congratulations on your 10-bagger. Next up, we have a Wallstreetbets trader by the name of King of Shrimps. He has made tens of thousands of dollars by playing meme stocks, and now wants to quit while he's ahead. In particular, he has made plays on Clover Health, Corsair Gaming, GameStop, and Palantir. Interestingly, 3 of 4 of his plays are in the red, but it only takes one GameStop going to the moon in order to wipe out the losses and leave you with $42,500 of sweet gains. His investment in GameStop was twice as big as the next biggest position, but in the stock market, what often happens is that large numbers of stocks lose a little bit of money, while a very small number more than makes up by making 10-baggers. As for his announcement that he is quitting now, we will see if that actually ends up happening. Most people seem to think that this attempt at cashing out once and for all will actually end up with the OP crawling back for more. Congratulations on your gains. Next we have a Tesla trader with a series of day trades that would make any pro jealous. He went all in on FDs on Tesla, and to say the least, it worked out. He started out by buying 93 contracts of 670 strike calls expiring on May 7th. He bought them at about 10:02 a.m. on the day of expiry for a price of $610 per contract, or close to $60,000 total. Luckily, Tesla was in the middle of a strong morning rally right about then, and the OP flipped those calls just 10 minutes later. At exactly 10:12 and 42 seconds, he placed a limit order to sell all 93 contracts for $9.70, which filled 3 seconds later at 10:12 and 45 seconds. The proceeds from the sale exceeded $90,000 for a $33,000 total gain in the span of those 10 minutes. In terms of percentage return, that's more than 50%. One might be tempted to say that this trader has paper hands for getting out of the market so quickly, but if he had stayed in for too long, those gains would have quickly faded and reversed. The reality is that most of the time, FDs don't turn out this well. Just ask commenter Bolts86, who says that he lost $10,000 after initially making $5,000 on Tesla gains that same week. Next we have another case of a massive portfolio booking modest percentage gains, but the size of the portfolio making them huge in absolute dollar amounts. User Ordinary5612 says that he thinks buying Berkshire Class B shares will help investors build a $1 million portfolio. It turns out that this trader bought 35 contracts of 285 strike calls on Berkshire on May 3rd for a price of around $2 per option. Now those options are worth between $7.20 and $8.50 based on the bid-ask spread, meaning that in the worst case scenario, he could cash them out for $7.20 each. That would book him a 250% gain in only a few days. In a thinly veiled flex on fellow Wallstreetbets traders, he also posts this screenshot showing his positions, where you can also clearly see his total stock portfolio value of $905,000. He said in his post that if you can't make his level of 250% Berkshire YOLO gains, it'll take a decade of compounding to build up a portfolio the size of his. Of course, there are many other factors in determining the future size of your portfolio, but regardless, congratulations on your trade. Alright guys, that wraps it up for this video. If you like the content, make sure to smash that like button and subscribe for future uploads. Also, make sure to check out our second channel, WSM Research, where we post DD on high growth stocks. As always, thank you guys so much for watching. Wall Street Millennial, signing out.